right, Coca-Cola. It's the most valuable brand on the planet. This is according to a consulting firm named Interbrand. Its shares are on a 3-year uptick, and earnings they're out tomorrow morning before the bell. So rising commodity prices, that could actually hurt the company's profits this go around, but still most analysts rate this one. Do you buy Coke and smile? We got 3 takes for you. Todd Schoenberger on the fundamentals, our closer Rob Sluymer on the charts, and Matt Shapiro here with your options trade. Okay, first over to you, Todd. Give me the fundamental perspective on Coca-Cola.
Okay, if you look domestically, Trish, they have had 9 consecutive quarters of sales growth. They're going to have 10 when they report tomorrow morning. This is a company that's seen volume increase for the sparkling division. That's the carbonated drinks. They saw an increase of 4% volume growth just last year. You buy this stock for the growth story, Trish, not so much for the quick trade, because granted, like you said, the commodity costs are those headwinds. But moving forward, this is a great buy, especially on the recent weakness on this stock. You definitely want to go long with it.
All right, well, where's the growth coming from? And we all know that soda and the war on soda is gaining in momentum. Soda's kind of a thing of the past. People are looking to new beverages. Are they going to be able to compete in this new beverage space?
Great question. On Dasani and Powerade, those are great 2 winning brands right now. They're seeing double-digit sales growth just on those 2 brands alone. Plus, don't forget, they also introduced juices just last year. This is a company that's growing, Trish, but they're progressive about it. They own market share for 1 and 2 spots here with Diet Coke and Coca-Cola. They're beating Pepsi, and that's not just domestically, it's also globally.
All right, let's go to Rob here, get a technical perspective on Coca-Cola shares. What are they telling you?
That's sort of an interesting chart, Trish. It's really, if you look back through time, stock sort of bottomed out at 36 back in May. It's had a pretty good run back up to that $40 level as we moved into that July time frame, and it's effectively corrected with the broad market. What we like about Coke from a long-term standpoint is it's more of a defensive name given our bigger market views. But right here, right now, when we look at the trading that's developed, stock sort of topped out in that $39 range, and there's a lot of support as you move down in that $37.60, $37.50 range. We think there's very limited downside, and we like the stock from a very long-term standpoint, given that we think it's going to be a very good defensive name to be.
Okay, long-term you like it. Short-term, we got earnings out tomorrow.
I think the stock is going to have, I think it's to the upside.
To the upside. Okay, Matt Shapiro, tell us what you're seeing in the options market right now and what you specifically are doing to make money on Coke.
Well, you can make a big play for the upside. With 4 days to go, you got the October 38.5 call. Guess how much it is?
Tell me.
Only 17 cents. For that, you can get long this name. Everyone's glowing about it. I like it too, fundamentally, and I think it's an under-owned growth story. So, if they come out with a good number, the whisper number is 52, something a little bit above that, 39.5, you're in the stock already with a big gain. Okay, Matt echoing some of the same things we heard from Todd Schoenberger. Todd, when we talk about growth in this company, I got to ask the question. We're looking at a slowdown in Asia, a slowdown in Europe, anemic growth here in the States. Are people really going to keep spending on beverages in this environment?
They will. I tell you what, you cannot stop people right now. You can put calorie counts out there, Trish. They're not going to stop from the syrup and the sugar. Look, if you want to give them a soda, they're going to drink it anyway. But it's not just here domestically, it's also globally. Emerging markets is what's going to be the octane for this company over the next 5 years. They also expect a double volume growth by 2020, Trish. This is a company you want to take a hold of. They've been around for over 100 years, yet it's still a growth story.
Matt Shapiro, what's your trade?
Definitely getting long this stock, buying it right here like the analysts say, or if you want to get a lot of leverage to it, these calls for 17.5 cents seem way too cheap given where the stock could be if they have a good earnings report. Okay, final word there to Rob Sluymer, the technical perspective on this one. You're optimistic?
Downside looks very limited. We like it for a variety of reasons. Again, short term, it's into support. Longer term, we like it because it's a good defensive name given our cycle outlook.
All righty. Thanks, Todd. Thanks, Rob. Thanks, Matt.